Welcome back, everyone. So, I'm doing two videos today. What I want to go over as a whole is market structure, market maker models, which we did in the first video, and then the state of price delivery because they play an impact. And I found a really good example from this week. So, let's get straight into it. Let me switch the screen. All right. So, when I say Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, I can't remember what ICT video this was on, but this is in the week. Well, I'll show you actually. This was in 2024 during the election. This is the week basically, and it delivered exactly to this. Every week doesn't always deliver exactly to Sunday consolidation, Monday expansion or reversal, Tuesday reversal. Like it doesn't always do that, but what it will do is it'll start from consolidation and then it'll move to expansion, and from there we'll either have a reversal or retracement, and then from there we're either going to from a retracement we'll go to expansion, or from a reversal we'll go to expansion, and then always we will end with consolidation, right? We will come back to consolidation. We don't go from expansion to consolidation. We don't go from reversal to consolidation. We don't go from retracement to consolidation immediately. Well, okay. Consolidation is our only starting point. So inevitably, we all have to return to consolidation, but it doesn't go like we have an expansion, consolidation, retracement, consolidation. Like this is how it moves, and you'll understand it when we pair it with the charting. But look at this. Don't take it as like law set in stone that this is gonna happen that week. Like Thursday, Friday, we're gonna have a reversal retrace. Okay, you know what? Thursday, Friday, we have a continuation higher after a retrace at midnight. Right? Okay, we do have a retrace here, and then we get continuation. Like, take it, take it very as it is. It can happen. It might happen. It might have some resemblance to like Monday expansion reversal. Okay, wait. Okay, Monday, no. Okay, Monday, you know what? We did have an expansion, and then we did have a reversal coming Tuesday, and then we went to consolidation, and then we had a Wednesday, Thursday reversal, or retrace, really, and then we had a reversal from there. So, see, like, there's some sort of alignment with that throughout the week, but it's not always 100%. Sometimes it is. Sometimes you'll get, like, parts of this, but just keep that in mind. Keep that in mind. So what I really want to draw your attention to is this right here. Keep this in your head. Actually, I want to put it up side by side. Right here, this is this week, actually. We have Sunday consolidation. That usually happens. It will usually always happen. Sunday consolidation, we're not really doing much. We're just kind of moving back and forth, having a range. So this blue box is going to be consolidation. What do we do right after that? We sweep low. Let's put the magnet on. These are just my defaults. I usually use white and blue, or white and black, and all kinds of other colors. But anyway, so we swept low. What do we have? We had Monday, we had a very big expansion. How can you tell this is expansion? Well, what is an expansion? We're just having a really large movement up. Why isn't it a retracement or reversal? Why is it an expansion? Because we're already in this long uptrend. A retrace would be Monday move. We go all the way. Where's my arrow? Where's my arrow? There's so many fucking doodles on here. We would retrace like to here, right? That would be a retrace. Reversal would mean we like completely reverse direction and really drop, right? That would be reversal. No, so no, we have an expansion, right? What do we do after an expansion? Well, we're going to either have a reversal or a retracement. So what do we have right there? We have a retracement. This isn't a reversal. A reversal would mean we take out these lows and we're completely reversing, right? Because we would have to have something to reverse this off of, right? So we would have to reverse here and then come lower. So we have a retracement, right? Think about this. Next, what do we have? After a retracement, okay, well, we can't go back to expansion here because we're consolidating. Well, okay, so I said that wrong. We could go to an expansion higher, but what I'm expecting is we have a consolidation because Wednesday, usually in the middle of the week, we do consolidate. And plus, this was a something news day before FOMC. So we do consolidate. And then what do we do? Next, we retrace. Retracement. So right back, we go back to consolidation. We have an expansion. Our expansion is to the downside. Why I'm calling it a retrace, I shouldn't, because high time frame we are bullish. So this is a retrace to me. This is a retrace to what? The weekly low. Weekly low. That's all uppercase and that's fine. So weekly low, right? So we just swept weekly low. Where are we going to? The weekly high. Current weekly high. Since we are high time frame bullish, that's what I was expecting. So that's why I took that Asia session trade last week. So a retracement is this. We have a retrace, but then we're continuing the trend. That is a retrace with the direction. If it was a reversal, we would do something like this. We'd break structure, retest that, and then move lower. That is a reversal. So if we hit that weekly high and then started reversing and then coming all the way back down to this sell side that we just made, that would be a reversal. If we're continuing up and we're supporting structure, see that order block right there? We're supporting structure to the upside, that is a retrace, these short swing lows. Difference between retrace and reversal. And expansion, this is an expansion, expanding above our high. You know, those long legs where we get really clean movement. This is an expansion, right? Reversal is happening right here. Smart money reversal. Keep this pattern in mind. We just went over that. But that is basically what the state of price delivery is. Are we consolidating, right? Are we expanding? Are we retracing, or are we completely reversing? And a reversal doesn't always mean like, okay, we're dropping. A reversal doesn't always mean it's this complete drop. Like we're completely reversing structure, like something like here. That would be easier seen on the like 1 minute or 2 minute. But I mean, the gist of what I want you to get for the state of price delivery is starting consolidation, we move to expansion, and then either to reversal or retracement, and either we move back to consolidation and restart the whole process again, or we're just expanding in the direction of the drawn liquidity. Right? Look where consolidation is. Just if you don't know what to do with this information, literally just look to where consolidation is. What's next? We have to expand. No matter what, we have to expand because we have to create a longer range to trade in, right? We have to have our premium and discount range, and that has to be a bigger range to trade in. So from consolidation, we're going to expand so we can get a bigger range to trade in. So then for the next, whatever we're going to do, retrace or reversal, we have that range to either reverse completely in and take out all of that sell side, in this case, a buy model, or we have a retrace to like 50% of it, some sort of internal sell side liquidity that we talked about in the last video, and then continue higher from that. Like that's what happened right here. That's what happened right there. And then our reversal. Okay, wait. Okay, and right again, right in the middle of the week, we go back to consolidation. We have a displacement lower. We displace to the weekly low right here. And then what do we have? Since we're bullish on the high time frame, we tapped into like a daily fair value gap and some other thing on the 4 hour. We had a reversal right there. And what do we do after reversal? We're expanding. There might have been some sort of consolidation, but after a reversal, that's usually we start to expand to the upside or the opposite of, you know, the move that just happened. So then we're gonna expand. We're gonna retrace. Right, this candle alone right here is our retrace, and then we're gonna expand higher. We have a retracement, expand higher, retrace. So either we're bouncing between these three, or we go back to consolidation and then we expand and then bounce between these three. Think about that. Think about that. That's how the market is moving. And right, so we use this as kind of a guideline of how the market would move. Consolidation on Sunday, we got that. Expansion on Monday, we got that. Reversal on Tuesday, Wednesday, we got that. And then we have an actual reversal. And then a expansion, and then reversal retrace. We had a retrace right here. That was the big short setup that gave, or big long setup that was moving short. And then expansion higher at the end of the day. After here, a reversal. Right here, we were basically downward. Okay, this Friday was not a great example of how to end on a Friday because we're in all-time highs, and usually you get like a TGIF sometimes, or it'll just be kind of a mid Friday, to be honest. But like I said, you don't want to take this as set in stone, but you want to use it because it will act kind of in accordance with that chart. What happens each day? You're going to consolidate this day, reverse this day. I mean, yes and no, but you got to look for it. You got to have that in mind that it is possible. So keep your eyes peeled for it. I mean, we can find another example if you want, right? To the left sometime. I had a really good example and I lost it. And it's kind of annoying. So let's look at the week before. See if we can spot this out. Sunday. Easily you can spot that as consolidation. I mean, nothing is happening. Nothing is happening. We have an expansion. Spinning the range. Then we are having a retrace. And now we have an expansion higher. Not really expansion. Like this is all, I would consider all this consolidation. But there is a larger, we were just trading in a lot lower range, right? We didn't have as much volume, so we're trading a lower range. Then we have a reversal right here. These are going to be all in blue because I want to get through this quickly. Reversal, what do? We took out the entire week's liquidity, or we made relative lows with it, and we took out Monday's low, right? So we have a reason to reverse. Then we get an expansion. Then what do? We get a retracement. Then we get an expansion. Oh, and then we get a reversal. What do we take out here? Something. Oh, what is that? That's like previous monthly high or something. Previous weekly high. A previous weekly high. So we have a reason to reverse. Then what do we take out here? I don't know. Let's just try to figure something out. Maybe optimal trade entry of the current range? Maybe? Okay, now we are reversing from there. And now we just get stuck in consolidation because it's the middle of the night. And then we are expanding higher, and on the lower time frame it'll show right here that we had a retrace and then expansion. Like that's what it'll show. So you can see here as we're going through the market, I'm thinking about what is happening and what can happen next. And what can happen next is usually influenced for me by where's the draw on liquidity, because what can happen next has to be related to the draw on liquidity if I want to enter a trade, right? Because we have to be in alignment with what's happening on the higher time frame, how the bank and bigger institutions are moving the money in the market to what do I see in the market and what can I predict is going to happen. And really that just falls on what's the chart telling me. No indicators, nothing, just pure chart, smart money concepts, and intuition basically. Once you get the hang of it. Intuition. Like this right here, I take off everything. Bro, what does that look like? That looks like nothing. You would have never thought we would have that kind of direction of price that you could literally have foresight for when you use this and high time frame drawn liquidity. So that's going to be it for this video. I hope this was a little shorter and definitely more clear than the last. I mean, this is one concept. And so I'm just kind of playing with the charts right now. But basically, this is one concept, and I think it's very important. Take a screenshot of this, understand it, get a tattoo of it. Like, okay. This right here will help so many people if you really understand this movement and this cycle that price goes in. I mean, it's called the price delivery cycle or whatever. What do we call it first? In the notes, state of price delivery. Because what does that mean, state of price delivery? It means in the current state of the market, like the time right now, state is right now, what is price delivery doing? Is it consolidating, expanding, retracing, or reversing? Well, what do we want to trade? We want to trade expansion from consolidation, and we want to trade reversal from retracement, right? Or expansion to some sort of high time from PD the rate, and then we want to catch the reversal, because right after that reversal, what do we get? We get an expansion. We don't get a retracement after a reversal because we're reversing, so we have to expand, right? After expansion, you can trade a short-term retracement, but then we're going to what? We're going to expand higher, or then you'll get another setup for a reversal. But likely we're going to expand higher after retracing, because that's market structure, right? We were talking about retracing the fair value gaps, then expanding higher, then retracing, then expanding. When you have a clear draw on liquidity, that's just going to repeat until it gets hit. You're going to have probably consolidation in there, and then it might reset the whole system, but that's what's going to happen. So this, I hope you got some more information out of this. I hope I'm teaching well. I really do. I really do, because I'm very passionate about this, and even though this is more like intermediate ICT concepts, I would say, and we're going to get to some more advanced ones. And not like bottom and top ticking. I don't do that yet, but my levels, you will catch them if you want to enter there. You can catch them. Like I said, like I showed you in the last video on Friday, you can catch them within 5 points. I don't see them likely, and I don't enter off them, but I at least know where they are likely to happen, which we'll build up to top and bottom ticking if we want to. That's not like a every trader needs to bottom and top tick, bro. It's a trend for a lot of content, but it's also just really, really well market understanding for people that can do it continuously. And I've seen it. So I'm just going to close the video, learn this, understand it. That is the first big portion of what I wanted to cover. And does this pull up? It does not pull up. Okay, well, I guess my screen recording is not doing that, so. Okay, there we go. This is the first 3 concepts of what we wanted to cover. So, right, market structure, market maker model, state of price delivery. What I just told you was basically out of those 2 videos, how is the market moving? In what way is it moving? What is the cycle of its movement? What are we looking for? The states of price delivery brings it all together of, okay, how is it starting out? Where is it coming to? What are all these moves in between the market maker model? And how does market structure tell you where price is going? That's it. Like, this is the most basic intermediate understanding of the market, but on like the most basic level is just the market moving, right? We're not even getting into certain times of the day or prices or gaps and macros and the range quarters, and we're not even getting into that yet. This is just the market as a whole moving, and the portions inside of it, which you can see, which are either consolidation, expansion, retracement, or reversal. Simple as that. Just rewatch the video if I was too fast, if you didn't understand quite yet, and really just go look up other videos or look into TradingView and find it for yourself. Like, it's right there. You'll see it once you practice it, you back test it, you'll see it more, and then it'll just be second nature. You can go up on any time frame and map those out. Just like that.